We're here to talk about hotel insurance. Now, the biggest problem we have, Christian, is that most of the hotels across the country is down approximately 50% in revenue,
Sure.
and yet, we're watching all our expenses. But one of the
Absolutely.
expenses that's rising is our hotel property insurance is actually going up.
Yep.
And so this is very difficult for us to navigate, with low occupancy, less revenue, yet higher cost.
Of course. Yeah, no, absolutely. And you're absolutely right. We're seeing increases, especially in the habitational space, which is where hotels fall underneath. It's been a trend that's been occurring for the last few years. And what we've seen is with the COVID-19 crisis, it's really thrown those increases or spiked those increases for multiple reasons. Some of the terms that we use in the insurance marketplace are hard and soft markets. A hard market is when basically you have capacity leaving the marketplace and pricing goes up because there's less players willing to write. Like I said, this has been going on for a few years, but specific to the hotel marketplace, we've seen quite an exit, and it's really created a situation where, pricing spikes are going up quicker than anticipated, and we're kind of right in the middle of it right now.
Now, you said hardening trend. Can you explain what this hardening trend is in more detail?
Yeah, sure. So, a couple things here. Like I mentioned, hotels fall under, within habitational property as they're looked at from an underwriting standpoint. So you're lumped in with apartment complexes, condominiums, et cetera. As you know, most hotels in, your standard franchised hotels that you're going to see, y'all are running about, 5 to 10 million in values. Most of them are frame construction. And so frame habitational construction has been a tough class of business. That's compounded even more if you're coastal, or in a state, that's touching a coast. And then if you're in a parish or a county that touches the Gulf of Mexico, that can make it even more difficult. But what's happened is we're seeing players exit the space or restrict their coverages, and so the guys that are still in, the companies that are still in and riding the class of business, we're seeing pricing increases. And again, what COVID did, again, when you're looking that hotels are going to be grouped with hab markets. An apartment complex isn't going to have a big loss of business income claim or even be making really a claim due to COVID loss, because people are still going to be living in that apartment complex. Obviously, the orders that were given on a state level or local level due to COVID-19 created a major loss of business income situation for hotels. So there's been a lot of claims. Now, there's not a whole lot of claims that are being paid, but there's a lot of claims in general. And right now we're starting to see lawsuits where there's different rulings that are occurring, meaning I just saw that there was a lawsuit in Missouri where they actually ruled that the insurers needed to pay COVID-19 related claims. Now they're going to be fought for years, but it really made some of the markets say, whoa, we're not even going to write that class of business right now till we see kind of how this shakes out. And unfortunately, that's where the hotel motel marketplace is at. It's very limited in the carriers that are going to write, and it's creating a situation that's increasing premiums, unfortunately.
So Christian, you said quite a mouthful there, and I want to make sure I kind of break it down a little bit more for
Sure.
people maybe viewing this a little later on.
Yeah.
You said something about habitational classification, is there any way that we can modify or change the classification that's more representative of our hotel business?
Uh, from an underwriting perspective, no. I mean, that's just the class. You've got people who are staying there, so it is going to be considered a habitational business.
Because a short-term versus long-term, we're really lumped in with apartments, which is more wear and tear on, from a long-term standpoint. Again, from our standpoint, again, everything's on the table for us because we're just been so devastated
Sure.
by the loss of revenue.
Understood. And it's a multitude of things. I mean, that was a lot of words, but it was a very general overview of some of the things that had been affecting the marketplace for years. And overall, what's occurred, Manish, is, with insurance, we've been fortunate here on the Gulf Coast that we hadn't had any major storms that have hit recently, which has an effect in individual owners here in the area. Countrywide, we've had, more fires out west. You've had some storms that affected things. Severe weather has been worse from a hail perspective. So the insurers as a whole, have been less profitable in certain classes of business, hotels included, which has created the hardening trend where the slight increases in premium. Whereas now, I think we had mentioned when you and I had spoken before, I mean, I'm seeing on accounts that don't have losses, you should probably expect about a 10% rate increase on accounts that have losses or, have other factors due to age or location. That increase could be even higher, 30 to 50% increase. So it's really going to be about planning and understanding, what you're looking at and then planning for it, and the other lines as well. We're talking primarily property. Y'all are getting, as an industry, it's tightening up from a liability perspective. The commercial umbrellas are tightening up. So y'all are really taking rate increase kind of across the board on the coverages that you're purchasing due to, market pullback.
So you touched on something earlier too. And so I guess to summarize what you're saying in a nutshell, there's less players, there's less insurance companies that are willing to write coverages. And therefore, because there's less property insurance available, the premiums are going up. So, and then you touched on something earlier too. You said about the loss of business income. Now, the loss of business income claims, even though they're not going to get paid, they're driving our rates up. Are you saying that, looking in hindsight, that we should not have filed any loss of business claims? What would be your advice to the hoteliers that have been affected by COVID, right? And they have lost of business income. What is your advice to us, the hotel owners, given the circumstances?
File the claim. 100%. Any client of mine that's been affected and asked my opinion was to go ahead and get it filed and set up with the carrier. There's a lot of nuances within policy language that are coming into play, but not to get too far down that road. In simple terms, an insurance company is going to have to give you a written reason for denying coverage on a loss. And there's some key things that are being litigated right now, frankly, about policy language and how does the pandemic come in. Now, most policies had a pretty clear virus exclusion within them. However, I mean, those are being challenged as well. So, at the end of the day, my job as a broker is to help you manage your risk and get you the broadest coverage in the marketplace that I can get you in the event of a loss, and then to advocate on your behalf in the event that you have a loss that could potentially be covered. So my advice is to go ahead and have it filed and get your response back from the carrier. Because the other thing is like I said, I didn't really know how they were going to fall. And there was a lot of things that were going on. And I didn't want there to be a situation where any of my clients had issues for not filing in a timely fashion. So my advice was to go ahead and file the claim. Even if you get a denial, to have that in writing from the carrier. And most folks did go ahead and file the claim that I'm speaking with, but that was my advice.
So for the hotel owners that in hindsight have not filed loss of business income claim, are we past the prescriptive period where they can file a claim? What is your advice to the hotel owners that have not filed a claim?
You know, I would go ahead and just have it filed and documented, and go ahead and file it. Even at this point, you know, if you've suffered a loss, you're going to want to get together your financial information and have your agent or broker just go ahead and file it. You know, you will likely have a virus exclusion in your policy. They're pretty clear. But, you know, you want to go ahead and do it. And I mean, I don't know what regions, like I said, Missouri right now, I just saw a ruling and it had just come across this week where they were saying, you know, insurers were having to go ahead and provide coverage for loss of business income due to COVID related losses. So, you know, and again, the activity of that in handling those claims, even though they're being denied, has created uncertainty on the insurance company's behalf, because they're not really sure, you know, exactly what was going to happen. So that was a big reason that a lot of them just said, whoa, look, time out. Let's kind of see how this shakes out. Let's put a hold on writing this class of business for right now, and kind of see what's going to come about from COVID-19 and in business income related losses specifically.
So, you know, what I understand about the insurance company is that if they do pay out any money, right, it's going to come back. We're going to have to pay for it some way. That's the way they get their money back, is to charge a premium. So even if I were to file a loss of business income claim, right, they're going to spend about $1,000 to investigate that claim. That's money that's going to come out of the insurance company's pocket, right? And so if they're paying $1,000, at the end we're going to be paying for it, right? So how do they justify? I guess I'm getting to a point. How do they justify? How do we justify filing a claim that we know there's good certainty it won't be paid?
Again, I mean, I think the reasoning behind it is if something were to occur where there was a ruling, you know, where they said that, you know, they were going to have to pay those type of losses. I mean, in my opinion, the contracts are pretty clear. And when I say contracts, the insurance contracts are pretty clear with the virus exclusions. And so if you don't want to go through it and you've got a virus exclusion on there, you know, it comes down to the preference of the policyholder. I mean, the companies are getting them countrywide. They've gotten tons of them. And if you're thinking one way or the other, should I or shouldn't I, you know, my recommendation had been to go ahead and file it and see what happens. The expectation is that it's likely going to be denied. You know, and specific to whatever the policy was. I mean, I would, you know, let you know, and give you the reasonable expectations of what is going to happen, but at least to have that in your hand. And then you have the option as the consumer to do what you will with that denial, you know, and if something happens where the carriers are forced to pay it, then you're in a position to maybe recover some of your losses.
Yeah.
Is that going to happen everywhere? I don't think that it's likely. And that's why I said, but I didn't see any harm or foul in having it in there if there was a possibility that you could potentially recover some of the losses under the business income policy form. I see both sides of it. I mean, I see where the insurance companies come from as well.
Right.
You know, but there's a lot of folks now that are in crisis mode and they're in, you know, survival mode with regards to keeping the doors open. So you got to weigh all those factors out. But that has been my recommendation.
So I guess a moratorium on writing hotels, is that nationwide, or is it regional, or is it Gulf Coast? What are you seeing as far as moratorium?
It varies. It varies company to company. You know, I mean, a lot of these companies do write in most of the country, and some of them have put a countrywide moratorium in place. Some of them have limited coverages where they'll still write it, but you know, maybe they won't give you loss of business income. Plus, you can expect a rate increase. You know, I mean, there's all kinds of factors on the insurance company side. I think that you know, we just came out of, you know, we've been talking about a hard market cycle where pricing's been going up. I've been in the business for 15 years. For the majority of my time in the business, we've enjoyed a soft market cycle up till about 3 years ago, where there was a lot of capacity and a lot of players that were willing to write business in general, including hotel motel accounts, and that created a good position for the consumer, and it created a position where you know, you could get better terms and you could get, in some cases, better premium, and you could drive that pricing down. That hit bottom probably about 3 or 4 years ago, and we've seen it turn. I mean, the marketplace is cyclical. It's up and down. So there's been an adjustment overall. So that some of this is an adjustment in the market back up, you know, and then some of it's driven by what's going on specifically right now to the industry. But there are players out there that are still writing.
Yeah.
You know, and it's imperative that you get in front of them. And that's what we do, and that's our job.
Right.
You know, there's things on this slide here that we haven't really talked about on the other lines of coverage that are creating some situations. I know some of the major underwriting carriers for umbrella in programs, rather, on the umbrella side, you know, they've switched to a model which is crime score underwriting, which you could not have ever had a loss on accounts. And I've had accounts that I had with these programs for years and years and years, and we got a non-renewal. And I go to them and say, hey, we never had a loss. What's going on? And it's basically 100% driven by crime score. We ran a crime score. If it didn't meet the threshold, we have to get off of it.
All right, Christian, I'm going to kind of break you up just a little bit. Now, when you say crime score, what factors are going into the crime score for a particular property?
It's really going in they're looking at crime in the area based on zip code, and there's multiple factors that go into it. It's basically the rate of crime in certain zip codes versus the amount of population. You know, there's several factors in there, but the basics of it, and that's what it is. And there's community crime scores that they access and can go in and look up. And so that's something that companies are looking at now. And it's just a thumbs up or thumbs down based on that, which, you know, that's another thing that you've got to plan for, and see if that's going to happen. And you're going to want to know, you know, sooner than later, if it's something that's going to affect you. And so hopefully the agent's having that conversation with you if they're getting a heads up that you may have some issues on certain lines of coverages for your renewal. And then, you know, again, on the liability side, occupancy concerns, you know, y'all are way down. So much of the buildings are unoccupied, you know, which a lot of underwriting programs were based on occupancy. I know if you've ever filled out a hotel application or supplement, that's one of the questions is what's your occupancy? So it's very low. That's eliminated some markets. You know, so there's just a lot of things that are working against some of you guys, or most of y'all right now. in the marketplace that require planning to overcome and get the best outcome that you can get in the marketplace.
Yeah. So you said all that to say this. I think this is kind of the nuts and bolts of what we could expect in the hotel industry regarding insurance. So I'm gonna let you, you can see the slide as well as I can. Kind of explain why should we expect a 10% increase? And does it matter if you're a franchise or not franchise or independent, or if you're interior corridor or exterior corridor, your age? If you can kind of dive into that a little bit more further,
sure.
I think that would be beneficial.
Sure. These numbers were coming from really what I'm seeing with the accounts that I write, and then what I'm hearing from an underwriting level and from the program managers that manage some of these hotel motel programs. Typically most companies in most classes of business are pushing for some rate adjustment. Again, the market's hard on most lines of coverage across all classes of business right now. So an expectation of around a 10% rate increase is not uncommon, and that's for accounts with no losses included in favorable loss experience. So we're seeing that. Now, you mentioned several things there that are individual factors on hotel accounts in general. Are they franchised or not franchised? That does make a difference, because some of the programs that have better pricing, they can't write a non-franchised hotel or motel. They can't write exterior corridor hotel or motels. So now we're going into markets that may be a little bit more restrictive in those instances. The terms might not be quite as good, and relative to what you could get in other things. But you can't change the fact that you've got a non-franchise hotel that has exterior corridors. So it's about getting out in front of those markets that are riding that class of business and telling the best story you can. On accounts with losses, it really depends on where the losses have come from. If you're with a market that's getting out of the space, your agent's now forced to go into the marketplace, which is a smaller pool that are even willing to write the account. So you can see, I've seen some sharp increases in that case too, on all all lines. I've seen, like I said, 30 to 50% rate increases in some cases where clients were with a very, very, very inexpensive program relative to the market, and that program manager or markets exited the space, and then we've got to go, and maybe their pricing was 15% below where the rest of the market would be for a similar sized and valued building. You're immediately going to take that increase just having to go to the general marketplace, right? And then when it's even more restrictive, and they're scared of the hotel marketplace anyway, you're going to take some increases as well. And so I'm seeing that sometimes. We're trying to offset as much as that as we can through planning, really taking a look at what we're writing, getting reasonable expectations on what to expect, and then really presenting our clients specific accounts and individual accounts in the best way possible for underwriting. And that takes a little time in planning, but that's created the most favorable results for the customer.
So I started our conversation very much kind of giving you the broad scope. We're down 50% across the board in revenues.
Sure.
And then you see anywhere between a 10% up to 30%, maybe even higher in insurance premiums.
Sure.
Those metrics don't work in unison. That's something that it's hard for us to pay an insurance premium when we're not making any money.
Absolutely.
So is there anything creative that we can do. I mean, because last thing we want to do is shortchange insurance, especially in the midst of hurricane season. So what is your advice to the hotel owners out there that are facing this dilemma?
Yeah, I mean, it's certainly a dilemma. I mean, if you're a franchised hotel, you're going to have a franchise agreement in place that's going to have certain insurance requirements. If you've got a mortgage on the property with the bank, you're going to have certain, you're going to be required to insure that property, and so you've got requirements on that you're going to be restricted in what you can and can't do. Again, I mentioned, there's people that are in survival mode right now. So my recommendation was to pull that franchise agreement out. And let's take a look at what's required. What limits are going to be required.
Some of the franchise, not to cut you off, Christian, some of the franchisors are adding more coverages that were not in our original agreement, but they're adding on to that. And I understand. I know you understand that, but I just want you to know that it's even more than what we had originally agreed to.
Understood. Yeah. Last 3 to 5 years, that what you're talking about, I've seen the agreements now require employment practices liability coverage, cyber liability, things of that nature that weren't in those agreements, 5-10 years ago. Those are required coverages. So, it doesn't leave you guys a lot of wiggle room of doing without. So we need to take a look at what can we do to keep you contractually in good shape with your franchise agreement and satisfying the banks. And so that's why I say,
Christian, I'm sorry to cut you off again, but there's a question in there that, and I want your guidance on. I guess my question for you is, as the insurance broker, is what kind of argument can we make to the franchisor to allow us to reduce the limits, because they're the ones, requiring this? I mean, what compelling argument can we make? Because I mean, ultimately they feel like that they're going to be responsible if we do not have that coverage.
Definitely. A compelling argument is I've got to keep my doors open. I'm not a proponent, of anyone reducing limits just haphazardly, right? And what we're talking about here is every dollar you pay to an insurance company is a dollar out of your bottom line. And it's an expense. It's an expense. And I get that. Look, we're in the, probably the top 5 of expenses of each one of y'all. And so again, if you're looking at cutting things out from a survival mode standpoint, talk to your franchisee. They may say, look, we'll allow you to carry a $5 million umbrella this year in lieu of a 10. And that may help some of you guys. It may not, it's just a matter of looking at all of these things and seeing what's going to be required if that's where you're at. I'm not a proponent of anyone, again, just cutting limits to cut limits. But there may be some of you out there that are carrying a $10 or $15 million umbrella because you're with one of those national programs that charge very little for that. And you may be getting a non-renewal, and you might look at that premium that you've been paying for that amount may be going up, 5-10-fold in the standard umbrella marketplace if you're not eligible for one of those programs. So if that's the case, we need to look at, hey, look, your premium dollars, if this is all that's required is 5 million, you may need to make that decision to get it down, because getting that to that $15 or $10 million mark on the umbrella may be difficult in this marketplace. And so you may have to have that conversation sooner than later with the franchisor, or just looking at what's required if you've got to cut back on some things because you find yourself in that situation.
You touched on something very important there, and I want to, because you look at so many insurance policies, is there anything that you're noticing that when you review policies that maybe some hotel owners are overpaying for, or maybe they misunderstand their policy and they think they're getting coverages when they're not. I'm just trying to give the hotel owners some kind of guidance, maybe, areas where they feel like they're paying and they feel like they're getting something, but they're not actually getting what they think they're getting.
Again, there's been a lot of changes. So, I mean, it's pretty broad with regards to what you're asking. I'm trying to figure out the best way to say this. So what I attempt to do is place a hotel account with a market that's going to give us the broadest coverage that we can get for that premium dollar. I mean, the specific hotel programs that we use have very specific endorsements and add-ons and some throw-ins that are in there that are industry specific, like bed bugs and things of that nature. You'll get coverage for that are within those programs. We may not have the option, depending on where you're located, to even put you with a hotel specific program. I guess I'm thinking of this more so from a property insurance perspective, this question. A property premium is a rate per 100 of the value of the building. So when you're getting rates from the marketplace, the only way to affect that is deductible levels or reducing the amount of property coverage that you have.
Right.
Now, reducing property coverage is likely not an option because you can put yourself in, there's a myriad of situations that you can put yourself in, whether it be from co-insurance, where now you're not fulfilling your requirements for your mortgage. So I don't advise just eliminating that, but it is a good thing to look at is what are we insuring these things at? Some things that happen too, some markets will run replacement cost estimators. Okay. And I've had it happen before where, the companies themselves, maybe 3 or 4 years ago, or the company that we had an account with 3, 4, 5 years ago said, hey, look, we need y'all to insure the property at this amount. Sometimes those estimators, depending on which one they're utilizing, can be quite inflated for the area. So taking another look at what we're insuring the property for, talking to a local builder or talking to someone like yourself that's familiar with the cost to rebuild, looking at that, what the building's being insured for is something that I would certainly recommend everybody do right now, because there are some cases where, that value, it goes both ways. Sometimes the value's way low.
Right.
And they may be getting themselves into a situation that they don't realize they're getting into by underinsuring the building. You could be penalized from a co-insurance standpoint, and you may have been with a market or a program that didn't have a co-insurance penalty before, which could reduce or negatively impact a loss if you had one. But you could be overinsured for that property relative to current construction costs. It doesn't happen all the time, but I have had it happen in situations. Again, we've been in a soft market cycle. So yeah, go ahead, increase my limits on my building by $1 million if that's what they're going to do. In some cases, we were doing that, and the client was paying less than what they were paying the year before, carrying less coverage.
Right.
So getting a good idea of what the true replacement cost of your building is a great start. And looking at your limits on the property side is a great start. I mean, as far as things that I think are important, look, equipment breakdown coverage, that's going to pick up your boilers, AC units and stuff. That's a very inexpensive coverage form that provides a lot of coverage. That's not typically something I recommend anybody cut out. Some people have it, some don't. Again, I review everything and let you know what you do have. And then the whole point of my job is to take your needs and where you need to be, and then us come up with a plan on how to try to get there, whether it's the pricing needs or the coverage needs. Really, it's both. But, again, it's this type of planning is even more critical in a hard market.
Yeah. I think you touched on a little bit of it. I'm going to kind of take it one step further.
Sure.
Your current management at your hotels, I think, plays an important role maybe not today, but if you start having claims, it's gonna bleed into your bottom line. So
Sure.
if you have a slip and fall, and you have a history of slip and falls where you're mopping the floor and you don't put the proper signage, that at the end of the day is going to catch up with you. And so I think one of the things that you are saying, I guess in the second bullet point, is make sure your management fundamentals is in place.
Correct.
Because again, we're all kind of dealing with strained labor. We don't have the labor source that we once had, and then we're dealing with less revenue. But this is not the time to take it easy on some of the fundamentals, because again, it's going to affect your income.
Absolutely. And it'll, positioning yourself right now, as again, when you have a limited market, the best thing you can do for yourself as an owner is to present your risk or your property and company in the best way possible. So that's putting together and working with your agent to put together a synopsis that tells underwriting why, you are a best-in-class facility, why, some of the practices that you guys have from a management and ownership perspective work. If you've had losses, what have you done to, what changes have you made to eliminate that from happening again, or to reduce the likelihood of that happening? So paying attention to that, not just sending out whatever into the marketplace. You want, the goal, my goal is to have your submission go to the top of the stack. It's going to be a tough go at it, but if you can present that account in the best light, it's going to equate to the best outcome for the owner themselves. So that's another thing that we're doing. All right. So we look at the agreements, but now let's look at our practices and procedures and policies that we have in place, or experience that we have from a management perspective that maybe would make us more favorable. Why? And so it's telling that insurance company in relaying to them the why. Why should they write your account? Why should you get the preferential pricing relative to your peers? And then positioning for that. And so these things that are on this bullet point here are some of the things that we go over when I create a synopsis for my client to give to underwriting and brokerages when they're looking at the account. What are we doing to keep our guests safe? What are we doing to keep our employees safe? What are we doing to keep our equipment up to schedule? What kind of schedule do we have in place to replace the PTAC units? What do we have in place as far if we have cooking on premises to reduce our fire hazard? So it's really getting all of that information together and telling the prettiest story we can about your specific location. So these are some of the factors that go a long way in making an underwriter comfortable and giving the best pricing that they can give, on your specific account.
And I guess to summarize, this whole slide or this whole, webinar in one sentence is that if you're going to go with your renewal and you're not going to put the time into it, or your agent's not going to put time into it, you can expect anywhere between a 10% and 30% increase, maybe higher. On the flip side, if you take the time to evaluate the safety of your property, and maybe safeguard your guests and your employees, maybe you can negotiate a maybe less premium if you're successful in portraying your story. Would that be a fair kind of assessment, not to put words in your mouth?
That is fair, and that's always been the case. The better that you can tell that story, the better position you're going to be to secure whatever the best pricing that's out there and that's available to you. And so that's what I'm highly encouraging my owners to do, is let's get that information and let's kind of go fresh and tell that story to position you, even though you may take an increase, 8% is way better than 15 if that's what's going to happen. And so we've been pretty successful at where we can, reducing the blow as much as we can. And that's, you know, in these times, it goes a long way, you know, and it's going to be important. So relooking at some of those things, I think it's more critical now than it's ever been.
Christian, thank you for your time. I appreciate it. I hope this webinar was helpful for everybody. Here's our contact information if you want to reach out to us. We're here to help. So
Absolutely.
thank you for your time, Christian. I really appreciate it.
Thanks, Manish.